Hey folks, Dan Frio here with your real estate update for October 24th, 2023. So I might have some good news for you guys. Rates are starting to come down. At the latter part of this video, I'm going to show you how a billionaire investor is coming out saying, I think bond yields hit their highest point right now. I'm going to start cashing in some investments because I think yields have topped out. So the first thing I want to go over with you guys today, as we do on a daily basis, is what is the economic calendar for today that might be shaping real estate? Well, there's really nothing out there other than the servicing PMI, and we're not going to look at that number today because I think it's kind of irrelevant in this market right now. So the thing I want to discuss today is the health of the housing market. So what you're going to see in mainstream media and TV all over the place is mortgage delinquencies are ticking up and the world's going to end because everybody's going to get foreclosed on. No, guys, the basics, if you read the context and you really understand the data, yeah, mortgage delinquencies up a little bit, but it's up 0.12%, okay, 0.12%. Okay, it's very minimal, but what you really want to focus in on is right through here. The number of foreclosures keep falling in September. There was 214,000 homes in foreclosure, the lowest point since 2022. And the biggest reason is people have equity in their homes. So the reason why you get foreclosed on is you just have no equity in your house. Okay, right now people are sitting on the most wealth that they've ever had in real estate. Okay, so I want you to understand that part of it. So don't think that there's going to be a flood of foreclosures coming to the market, flooding the market, driving down prices, because the reason why we have solid prices right now, mostly out throughout the country, is that there's no houses for sale. So you have limited supply and limited demand, which keeps an equilibrium on house prices. So you're not seeing a crash in the market. The next thing is we have a good news on inflation. We start seeing rental prices falling for the 5th consecutive months. So what that means is the biggest component of the inflation numbers we're seeing right now is in housing. Okay, well, we're now in the 5th consecutive month where rent prices keep going down and down and down. And you'd be surprised on what this chart looks like. If you go through here, here's where we were just back last year, right through here, about $1,850 on average. You're going down here to $1,250 on average. Okay, a huge drop in rents. So once this number starts to float over to our inflationary numbers that the Federal Reserve watches, they're going to see inflation pretty much plummet. I don't know if it'll go all the way down to 2% that their target rate is right now. We're going to get there sooner than later. So that's one other piece of the market that I want you guys to understand. But now let's go over to, if you ever saw The Big Short, you noticed how, or you understood how shorting the market, kind of helps things, or it's an investment technique. Basically what it is you're betting on a price of something to go down. Okay, well, there's a billionaire investor out there, Bill Ackman. He said he's shorting the 30-year Treasury bill back in August of 2023, just several months ago. Okay, so he was saying that the yields on the Treasury could go all the way up to 5.5%. Well, as yesterday's news, you saw that we ticked out up to 5%. So his bet's paying off and paying off big. But now yesterday afternoon, he came in with this. Ackerman's now saying he's covering his position because he thinks there's too much risk, and he thinks now we've pretty much topped out on yields and interest rates, and we're going to start covering. We're going to start going down and down and down from here. Again, this is one of the biggest investors on Wall Street. He's a billionaire, and we're following his direction on what's going on or what his investments are in bonds. And he's telling us right now he thinks basically rates have capped out on where they need to be or where they are at this time. So that's what we're looking at right now in the markets. Well, let's go over to see where the live market is with the bond markets right now. Well, yesterday you saw the 10-year Treasury. It peaked all the way up to 5%. Look at where we are right now today. It's plummeted. It plummeted yesterday and it continues to drop today. What we want to focus in on this channel is right through here. This is a mortgage bond. We follow this because its yield, the yield on this mortgage bond is actually the biggest rate or biggest component of your mortgage rate. Okay, so how this works is here's the price of the bond. Here's what's going on with it. Right now, it's basically up one tick. Basically, it's flat. But when the price of a bond goes up, which we've seen yesterday, if you see this chart right through here, the black dots right through here, those are actually green. The market rallied yesterday after Bill Ackman came out with his statement and driving yields down. So we're pretty much confident, well, at least he's confident, and I think Wall Street's getting a little more confident that we won't see any more rate hikes, and we're thinking that rates have peaked out at this point. And again, that's by Bill Ackman, a billionaire investor on Wall Street. So based on all this stuff that's going on, you might think, okay, Dan, is it a good time to buy? Can I qualify? What can I get? Well, I can't explain to you or can't, really talk you into buying a house. But if you really want to kick the tires to see maybe if you could qualify in today's market, all I need you to do is go over to here and visit us at therateupdate.com, and there's several ways you can reach out to me. But what we're finding out right now, there's a lot of people out there that are still trying to qualify to buy their first house. And please, all I ask you to do is don't disqualify yourself. But it's intriguing right now that we're getting a lot of applications. People are looking to refinance to pull out some money to pay off these high interest rate credit cards because they're out there saying, okay, Dan, I know I overdid it, but I have a ton of equity in my house. Well, I'm not looking to put you in any more debt. My goal is to help you be a good steward of your money and make sense of, does it make sense to maybe consolidate that debt into a lower interest rate, maybe mortgage or home equity loan? Or, is there any other products out there that can help you? Or you might be sitting out there saying, Dan, can I qualify based on my credit scores, the income that I have, and the little money I do have as a down payment? Well, we'd love to help you. What I always say is please don't disqualify yourself. So how you reach out to us is 3 ways. 1, there's an apply now link right up there. What it's going to do, it's going to ask you a series of questions. Based on the answers to those questions, we're going to assign you to a specialist on our team that qualifies to, help you in your situation. But if you're out there and you're like, Dan, can I call in or can I email you? Oh, absolutely. You're going to scroll down through my website and you're going to see calculators and blogs and all kind of other stuff that I think should be really informative to you. But if you go to the bottom, you're going to find 2 other ways to get a hold of us. You can give us a call at 844-775-5626, or you can email me personally at dan@therateupdate.com. Thank you so much for watching, guys. God bless, and I hope you found value in my channel. Take care and have a good day. Bye-bye.